the greatest investors of our time have always continued to buy great assets in any economic condition, provided the great assets have great, free cash flow and strong fundamentals.
Welcome to the Wild West Real Estate Podcast. And now, here's your host, Mark Henteman.
Today's guest built a software company before shifting to multifamily. He's currently focused on 150 to 250 unit assets in the Carolinas, Georgia, and Florida. I'd like to welcome Cody Littlewood.
Hey, Mark, thanks for having me.
Hey, Cody, thanks for coming on. I'm excited to jump into your story, hear how you did it, and learn some lessons.
I hope I have something worthwhile sharing.
Yeah. So, where did you start? What'd you do after school? Did you get right into multifamily?
No, yeah. So I think, as you mentioned, I built a software company from my kitchen table to I don't know, 75, 80 employees or something like that. Along the way, I kind of started to feel that the business income, I was making really great income, but I kind of felt like the business income was a little flighty, and I looked at my family and realized, man, if this, if for some reason the business fails one day, business cash flows always feel a little less permanent than than cash flow from assets. And so and especially permanent assets. And so kind of started looking around and, at what I could do to diversify my family's income in case something were to ever happen to me. And I don't know, I came across a podcast and really dove into housing in general. I really like being in a space, I like being in a kind of Maslow's law type of type of asset, right? Providing shelter. Yeah, exactly.
Hierarchy of needs.
Exactly.
Before we jump into the multifamily stuff, so you said out of college, you built a software company that had like 70 employees.
Yeah. So
How did you do that?
I went and worked for a couple. I went and worked for a couple companies. And then what I basically was doing is I worked for a startup, and then I went and worked for a large corporation, large organization that basically was trying to build an internal like digital team to build out software products for their customers. So different, that they sold material goods, but they wanted to build software to actually service their customers. And back then, this was kind of a novel idea back in like 2010. And so I headed up that team. And just kind of saw how broken large corporations are from a building, from building new things that are outside of their large commercialization. Large companies are great at like operational efficiencies and finance and accounting, and maybe they're like the Titanic though, right? It takes a long time to turn a big ship. And so they were just really bad at building software, and so that's kind of how I got into it. And then but I couldn't work inside of those large companies. And so I offered my services. I said, listen, I'll go do this, but I'll do it outside. And they became a customer. And then another company found out what we were doing, and they became a customer, and kind of snowballed from there. I still own the company. I still sit on the board. And so I'm still the chairman of the board, and I meet with the executive team once a week now. But I'm kind of built, I started investing. And then I kind of got the bug, and I kept growing and growing and growing. And now we're building, a proper private equity firm. And so that's what I do full time now.
Cool. Wow. That's impressive that
Thank you.
you were able to do that. And interesting to hear your insights in the corporate world on those companies. Like, you and definitely me, we're trying to build private equity firms and real estate and investing firms. And, we try to get those systems down and it's entrepreneurial. We're all building businesses here, but it's good to get your insights on, how the big guys do it and, where they stumble.
I would say they succeed out of pure momentum, like in spite of themselves, like
In spite of themselves. Okay.
Yeah. Most of these large organizations they're so broken. If they didn't have 500 tons moving in one direction, they would just fall apart. You could not
Wow.
run your
Wow.
firm like these companies run their business.
Yeah.
You'd fail. You don't have that
Yeah.
type of
Yeah.
momentum as the size we are.
My tiny window into that like major corporation world was I worked for American Greetings out of college. It was my first job out of college. And I was a writer
Awesome,
illustrator in a greeting card company, one of
right?
the behemoth greeting card companies. It was the rival of Hallmark, and
Okay,
they were our enemy, our sworn enemy in Kansas City, and we were in Ohio. We were at
yeah,
American Greetings, and they had like 5,000 employees, and yeah, our department was called the alternative humor department, and nobody knew what that was supposed to
the
be. And
alternative humor.
and
It's
management,
almost insulting when they say it like that, right?
right? Right. I think at the time, I think they were trying to chase the 90s demographic, try to get them
Okay,
to buy cards, but everything was hip and cool and alternative back then. So they were trying to
alternative.
do alternative cards. But
Yeah.
they must have had this idea at a meeting one afternoon, and they decided to do it, and then no one followed up on it. And so
Oh my
nobody
god,
knew what we were supposed to be doing. So we wrote the weirdest things
that's so
that never
typical.
sold any. We sold 0 cards, basically, our department.
Do you have any?
Yeah,
I'm sure
I
like as an ironic card, they'd actually be fantastic.
yeah, they were so ironic in the I don't wanna take up all our time, but, our the average greeting card buyer was like a 65-year-old grandmother who did not get the 90s hip ironic generation at all, and so we wrote very funny cards. We thought they were funny cards. They were very
Right.
surreal and, like, meta,
Oh,
but
that's funny.
nobody bought them.
Oh man.
That was my,
That's but that's so it's so typical to I mean that is such a thing, and let's create an entire department. They hired how many of you guys spent millions and millions of dollars for God knows how long. And then
right.
someday somebody like woke up and they're like, wait, what is this group even doing? Is anybody even reading that group? Or yeah,
Nobody's checked in on this group for, 18 months.
that's so typical.
And
They're so unaccountable. It's
yeah,
crazy.
yep. But aside from that diversion, okay, cool. So you started to, you know, you started to get into multifamily in the Southeast.
Yeah, well, I mean, first, what I did was, I was not, I didn't really know what I was doing. So I partnered up with somebody that I met that had already done some, had done some real estate investing before. We started with what we thought was going to be a flip, and we got into it. We were supposed to buy it for $160,000, which here in Miami is an insane deal. I think our median household or median house sells for like 550 now, $600,000 or something like that. So we bought it for like $167,000. We were supposed to put $100,000 into it, which seemed like plenty of money for a 2,000 square foot house. And then we were going to flip it for $100,000 profit. Everything would work gravy. Long story short, it was a wholesaler, no inspection. I didn't really know what I was getting into. I didn't know what I was doing at the time. My partner also missed it, although much more experienced than me. And we got into the actual gut of the property, and the walls had been stuffed with garbage and then stuccoed over.
Oh my
So
God.
yeah, so we had to. Long story short, but we had to rebuild about like 50% of the property. Concrete block construction in Miami. We have to withstand hurricanes, and so
Yeah. Oh my
uh,
God. Garbage in the walls. What
it
year was this?
literally there were sections of the walls where I don't know, to connect maybe two of the buildings. At one point there were two buildings or something. They basically lightly framed out wire, stuffed garbage in the wire, and then stuccoed over the wire.
Oh my God. Do
I
you think
swear to
they had
God.
a, did they, you think they got a permit? Like,
Oh no, yeah, no way. No.
no.
Yeah.
So what year was this? Was this like in
I don't know.
the
This was
crazed 2008, or is this like more
No,
recent?
this was like 2015. So
15. Okay.
yeah, I'm my two partners are incredibly experienced now, but I'm kind of the new guy. I've only been at this for like 17 years or 7 years or so. So
Okay. Okay. Yeah, that's insane. So you bought this, you were all in it 260? 160.
Yeah, we were all in for like 260 or something like. No, we were supposed to be all in for 260. That the plan was to invest $100,000 into it, but we actually ended up investing like $175,000 into it. There was
Oh,
no profit left to sell it, so we refinanced and held on to it. And now I'm unfortunately the owner of a single family home I want nothing to do with. So that was my foray. That was my first investment. It did not go well, but I learned a lot of lessons from that one. I think the number one lesson was probably to have, to not be anxious to deploy capital. I just wanted to
okay.
do a deal, and I hadn't really built out an underwriting process. And that was in a, not a, I didn't lose any money. So I
Yeah,
won't say it was an expensive deal, but certainly didn't make any money. Just trying to do a deal and not
right.
really, not really being patient.
Maybe that's the best of all worlds is that, you get to go through this experience, learn all the lessons from it, and not really lose too much money. Just
Yeah.
not
I mean,
not make
yeah.
money.
And I've held it for 7 years. So now I could sell it. The appreciation would be incredible, So
Yeah,
it is what it is, but it
right.
certainly didn't go to plan.
That's pretty good. Did you ultimately have to clean out all the walls and
Oh
replace
yeah,
them?
yeah. We had to,
R
we literally tore. I mean, we basically built a brand new house. I mean,
re
almost
rebuilt the whole thing. Okay.
rebuilt the whole thing. We didn't have to do foundation and a few other things, but we basically, it was brand new wiring, roof, wall. I mean, certain parts of the walls, brand new concrete block. It was crazy. We spent. I think we want to spend 100,000. We spent 188 off the top of my head.
Wow, okay. So coming out of that, what was your morale like? Did you not wanna do any more real estate, or were you determined to do it the right way?
I was I my next one went incredibly well. So yeah, so I learned a lot of lessons, and the next one went incredibly well. So the next one, we I don't know. I can't remember what we bought it. We bought it for like 250, put in 50. It was a duplex and it appraised for like 500. And we held on to that one as well. So the next one went super well. But then I started to realize, I mean, you know, I was looking at like my cash flow from these two properties, and it was like a couple $100 a month or something like that.
Yeah, was that because Miami? Were you in a
Yeah, I mean,
expensive
partly
market? Okay.
expensive market, but also single family homes. Small homes are like really hard to scale. I mean, I
Yeah,
was trying to replace a significant amount of income, and I was it was going to take me a really long time to get there, basically. And
sure.
so I kind of like looked at that, and I was like, okay, this is obviously this is going to take a lot of work to get to build this up, right? Like to really get to scale. I've just spent like a year on these two projects, and I built $300 a month in cash flow, right? Like that sucks.
Yeah.
So honestly, I didn't know that there were private equity options out there at the time. Like I didn't know I could come invest with like somebody like you or me. If I would have known that, I actually, to tell you the truth, I don't think I'd be in the position I am in today. I don't think I'd be building my own private equity firm, because I like, if I would have known at that point, I would have just been like, screw it, I'm putting $1 million with Mark, like, and like,
Right. Yeah.
then I'm going to go invest with this guy and this guy and this guy. I'm going to find great operators, because I wasn't necessarily, at the time, I wasn't necessarily like, I very well aware that these options were out there. So the next thing I did was I went and bought a bigger building. So
Okay.
yeah.
Yeah, you're right. It's really attractive to and invest a lot in passive syndications, and I love it. It's my favorite thing to do is take $100,000,
Sure.
wire it to a great operator, and just not have to deal with any of the headaches.
Yeah, exactly. And I mean, so what I do now is I like to do that as well. What I'll do is I like to do that with things I don't have exposure to. So for example, I got a lot of exposure to multifamily, obviously, but but I don't have much exposure to retail or to industrial. So I've been trying to find some great operators in those spaces, because I still think I still think being an LP, it's the one of the best ways to make money if you can find a great operator.
Yeah, in private equity, it doesn't even have to be real estate. There's
Oh
a
no, of
lot of
course.
ways to diversify. Just while we're on that track, I do the same thing. I invest in passive real estate, passive other things, asset classes, but I have avoided, I wouldn't say I avoided it, but I have not gone down the road on retail, office, I've done some build to rent and some industrial, but
Okay.
that's about it. So I haven't done self storage. I don't think I've done self storage yet. But so what are the other asset classes that you invest passively in?
Industrial retail. I like both those asset classes. I've been trying to do a passion project a year. So I bought a beachfront hotel this past year. It's like a
Oh,
small
awesome.
boutique hotel that like we're doing, I don't know, $70,000, $80,000 a key renovations, really beautiful stuff in a special little island here in Florida. So I like a passion project. So I did that one, but that's not a passive one. I did it as an active investor. And then I have some software private equity investments. I'm in, a few crypto funds that just kicked off after the recent crash. So we'll see how that goes. But
Okay.
they're buying now. So we'll see.
Oh, good. Yeah. I'm in a
Um,
couple of those as well.
yeah,
Hey,
yeah,
and I got to tell you, you're doing this hotel, this beachfront hotel.
sure.
I just did my estate planning, and
Okay.
so I have three girls, and so I shifted some of my equity over to these girls, and I want to get them into investing and investing, understanding real estate. So the
Yeah.
first thing we bought, and it had to be attractive, something fun for them. So I invested in a Santa Monica beachfront hotel
No
that is
way.
undergoing a complete sort of overhaul,
Cool.
and we're investors. All three of my girls and myself, all four of us are investing, and
Are
we're
you
going
guys
to go
on the passive side or are you doing it yourself?
totally passive. Totally
Cool.
passive.
Yeah.
It's not us, total other operator. I just wanted to like show them, like just have something to take them to, and we're
That's
going to
cool.
stay there. We're going to have breakfast there,
I love
and
it, man.
I'm going to say, hey, this you guys are your money is working on this, and this is how it works. This is how you invest and how you grow your money, and
I
in a
like it.
fun way. That then we'll go to the beach.
Yeah, yeah. No, that's really cool. I think that's a great idea. I stayed at our hotel like when we were making sure like the right staff was all in place and stuff with my son. And it was pretty fun.
Oh, awesome.
He's too young to understand. But I was thinking, I actually was thinking the exact same thing you were thinking or that you were saying. I was like, man, when he's older, this is gonna be like really fun. Like I hope I get to bring him here and I don't sell out by then. So we'll see.
Right. And yeah, and what an experience that I certainly never got to have. Like
Oh
nobody
yeah,
told
yeah.
me about any of
No.
this kind of thing. Um,
No, 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 absolutely not. I think my dad was all about index funds. So,
Index funds, yeah, I think my dad gave everything to one of his good friends who was not a very good investor.
oh god, yeah, okay, yeah, that's
um,
funny.
So yeah, where are you now? What are you we're in rocky like economic territory, or at least questionable, who knows? But you are did you say you've got about 150 units? Is that
No, we buy 150 to 250
Oh, I
units.
see. Okay.
Yeah, we have collectively between the three partners, we have about 1,600 units.
Okay.
So I started buying bigger and bigger stuff. I got to the point where I was like, okay, I can't do this with my own money because it's starting to get too big. And so,
Yep.
and unfortunately, I wasn't Rockefeller. Still not, I guess. So anyways, I met a partner in the same organization that you and I are part of in GoBundance. He'd bought 1,500 doors or something like that in Chicagoland. He wanted exposure to the Southeast. I wanted a partner that I would feel confident taking investors' money while working with because I'd done my own stuff, but like certainly not at that scale, right? So I hadn't gotten to the point where I was buying 150 unit apartment buildings. I was buying like 20, 40 unit apartment buildings.
Yep.
So I wanted to bring on somebody that had like the experience placing this size of debt and experience running these types of properties, basically kind of that, that senior GP. And so I partnered up with him and we started buying, significantly larger properties. As far as I guess economic climate, I mean, we certainly so now we own quite a bit of property together, and we're building a sizable private equity firm. I mean, our goal this year was to buy 100 million in real estate. I think we'll probably fall short of that goal, but probably somewhere in the range of 60, 60 to 70. And we're falling short of that goal. We're not slowing down in that we are. So we under. I kind of believe that, I mean, certainly, you mentioned the economic, current economic outlook. We think that the economic outlook is certainly getting worse. If we're not already in a recession's right around the corner. And that is a great, but right now it's also a really good time to make deals. Sometimes when the biggest opportunities exist are when there is when there is when there's a big split between fear and fundamentals, right? And so right now everyone is very scared. Everyone I'm talking to is basically not deploying capital or doesn't want to deploy capital. Or we're waiting to see what shakes out, or we're waiting to find a bottom, et cetera. And so there's a lot of fear right now. And I think that when people get used to the new normal, maybe prices continue to fall a little bit, but I'm also not buying for 3 years from now. We're buying for 15, 20 years from now. We're buying generational properties in great areas, and we're forcing the equity through our value add. So we just closed on our property 2 weeks ago. We're underwriting, slow rent growth because of a recession. We're underwriting increased interest rates because of inflation. And we're underwriting, rising cap rates or basically falling values. And if it still meets our hurdles, we'll still do deals. And so I think that's what you were alluding to earlier when you said, what are you guys kind of doing with the recession, before I went on a tangent. But we still think that, great investors buy great assets regardless of economic timing, right? You buy great assets with good fundamentals and good free cash flow. And Buffett does the same thing. And, Howard Marks and, the greatest investors of our time, Blackstone right now, I just heard their earnings call yesterday. The greatest investors of our time have always continued to buy great assets in any economic condition, provided the great assets have great, free cash flow and strong fundamentals. And so I guess we're not really changing, but it is harder to find deals that meet, the requirements that I just said. Okay, does it underwrite with higher interest rates, with rising cap rates and falling values, and with slow rent growth? And so those are few and far between. We underwrite 200, 300 deals a month. Our analysts do. We're maybe going to do 3 deals this year that meet their criteria. You got to be really picky right now. And so it certainly slowed down our acquisitions.
Sure. Yeah, that makes sense. We are seeing things slow down, but like you said, you make your most money in times like these, when the market's volatile, and
Sure.
especially coming out of it if you can. And I think there's a lot of things about today's economy and specifically today's real estate market that are not as ominous as in 2008. And I think a
Oh,
lot
no,
of that
no.
is
Yeah.
because of 2008. We came out of 2008, and I think thankfully our country and our economic system took some lessons away from that. And we don't have that subprime lending. We don't have credit default swaps and all the you know, crazy risky policies from back then.
Sure.
And we also have, as a result of 2008, a lot of builders were either went out of business or were gun shy coming out of 2008. So it took them a long time to catch up, and they still haven't caught up with the demand on housing, and
And they're slowing down right now. I don't know
they're
if you've
slowing
read,
down. Yeah,
yeah,
and
interest rates
compound.
and interest and inflation on materials, they've
Yeah,
massively slowed down their building this year. So
yeah, labor shortages. There's a lot of factors that, you know, it's a mix of different things going different directions, and there's a lot of factors that are make today's environment pretty interesting, and there are
yeah,
opportunities there, I think.
I think fundamentals behind housing are very, very strong, and I mean, in good markets, in the right markets, growing population, growing jobs, you know, uh, you see housing shortages across the board. And I think that the fundamentals are still really strong. I think there will be pain, but the problem is that everyone looks to the previous recession for what the next one's going to look like. And the next one never looks like the previous one.
Right.
So I don't think it's going to be painful in the same ways, but I
Yeah.
think it's certainly a time to be careful and to not, deals that people were doing last year, I would not be doing this year. I don't think necessarily we were doing those deals, but I was seeing deals getting done that I thought last year that doesn't make sense, and those deals are definitely not getting done this year. So
Right. There's going to be a pullback in terms of cap rates, and I don't know that
sure,
all of that stuff is going to be adjusting. And
yeah.
the tricky thing is just to predict where they're going to be for your projections.
Well, yeah, I guess it depends on how long your time horizon is too. So I think that a I think it's really hard to be a short-term investor in real estate. I think people have done it over the past few years and they've benefited from continually compressing cap rates and continually rising rents and continually lowering interest rates. I think it's hard to be a short-term investor in real estate in over like most market cycles though. I think that if you're a long-term investor, I think you're going to be great. You're going to do very, very well, provided you can, hold on to the capital. But the effects of compounding in real estate are incredible. And you really don't get those if you're just trying to flip it to the next guy.
Yeah, good point. And yeah, I think and just be careful with the debt. I think at this
Yeah.
point is the debt's kind of moving around. It's not that bad. People feel like it's bad relatively, but it's not that bad
Yeah.
historically speaking. But going back to oh 08 was just people were over leveraged, and that caused all
Sure.
the pain.
Yeah. And I mean, the 10 years down at like two and three quarters today. I think it was like 2.75, 275 basis points. The
Yeah,
long end of the curve, I mean, the short end of the curve, for value add guys, that's really hard, right? On the bridge debt. But
right.
the long end of the curve still looks, I mean, historically
Very
very
favorable.
low. So
Yeah, that's great. What's a trait you have that has served you best both in real estate and in life?
yeah, that's a good question. I would say delayed gratification. I would say that has been, I've always been very conservative with, I mean, we live in a house that I could have, that I could have bought cash. So I always have delayed gratification in my personal life, in my business. Like there were times where I could have taken massive dividends, but I pushed putting more capital on the, keeping more capital on the balance sheet. Real estate, there have been many times where, for example, on our deals that we do, our acquisition fees, we roll entirely into the deal. And instead of taking that as cash, that'd be great. It'd be awesome to take as cash. That's great income. But I rolled it into the deal. And, you look 7, 10 years down the road, and that equity is worth an immense amount more. We for example, we pour all of our asset management fees into hiring really, really great and expensive people, but over a long term, that's really paid off in providing great returns. So I think just like the concept of delayed gratification, especially in investing, but also just in life in general, I think it's really served me well. I actually probably do it a little bit too much to the extreme. I think I've talked with some of my close friends about like when should I enjoy what I've built, and like how do you find that balance? I've been so, as an investor, you're so well rewarded for delayed gratification, but like as a person, you're not really. And so I think trying to figure out that balance in my life, in my personal life now, has been something that I'm not always great at.
It sounds like you're not very materialistic, but that is a big help. Like if you could
Yeah.
orient yourself where that doesn't matter, you could find your gratification elsewhere and
Yeah. Yeah. No, for
keep
sure.
pumping everything, keep pumping all your income into these investments, which are certainly like building something pretty amazing.
Yeah, I think that's helpful. And just being I guess, Naval, I think it was Naval Ravikant that said, the man with 100,000 who wants 1 million will always feel poorer than the man with 50,000 who wants 25, so
That's a good one. I haven't heard that. That's
yeah.
cool. What's a daily habit that brings you the most benefit?
Man, the most benefit, I get a lot out of I just started doing this recently. So but I get a lot out of a morning walk and like just time in my head. So a morning walk and a workout. I've also just started like getting really strict about morning workouts, and both those things have made big improvements to my day as of recent.
And where are you walking? Are you in Miami?
I'm in Miami. Yeah.
Okay. So yeah, it's a nice place to walk in the early morning.
Kind of sucks right now because it's summer. It's it's
Oh,
end of
too hot.
July.
Too
It's
hot.
really
Okay.
humid. It's really humid. I envy the rest of the country during this time.
Oh yeah. I love walks. I go on like 3 walks a day, and I usually try to get my dog. My dog will always go with me, and I have 3 girls, 3 daughters, and I try to get them, and I could always get one of them to go with me. So
I'm terrified of California because of like just like an instinct of not liking taxes. But you guys have some of the most beautiful weather in the world. It's just bar none. You guys have great weather year round.
yeah, it is pretty nice. I'm not a native of California. I'm from Ohio, and
Oh, okay.
we all looked down our nose, especially that I moved to New York, and everyone looked down their nose at California and LA. And then I moved out here for the business. I was a comedy
Sure.
writer,
Right.
and I got out here. I'm like, why does everybody bash on LA? It's really nice. The weather is dry. It's not humid. It's sunny, and the sky is really blue.
I know. Yeah. Someday I'd like to do like 179 days there a year or something. So.
Yeah. Yeah, it's nice. It's not perfect. Obviously, traffic and 100 other things that
Sure. Sure.
are headaches. But cool. So yeah, what would you say today? What's like your biggest challenge in today's that you're facing right now?
I would say operating in the current climate with like while keeping my cool is probably my biggest like mental challenge. I think it's hard to read macro news every day and keep your wits about you. I do think I think it's what separates great investors from like mediocre investors. But yeah, this is the time. There's so many people that always, that I've talked to over the years, especially during bull markets, that say things like, that say things like, I don't know, like be greedy when others are fearful. And now that
Right.
actually everyone's fearful, they're doing the same thing as everyone else. And so I would say being a disciplined investor during times of significant market volatility and shifting, that's probably my biggest challenge right now. And like just keeping my cool in my head, and not even because anything is not because the data of anything we own is bad. Everything's running really well. In fact, the inflation's been amazing to us, but just keeping your head about you because it's just very uncertain times. And so I think that's a big challenge that's, underappreciated maybe. So.
Yeah, and along what you're describing is right now, the last month or so, I've really enjoyed like digging into history, like economic history, because
Yeah,
it has consequence right now. Like things are changing, and I want to see what happened in '08, what happened in '01, what happened in
sure.
the '80s, and trying to create a thread of like what caused what and how everything is somehow linked, and trying to understand it, because if you can, you'll
Yeah.
be a better investor.
Yeah, absolutely. I think understanding history makes you a better investor. I think also understanding, your own psychology is like makes you a really good investor too. So
And others, and the
and
investor
others
psychology.
psychologies. Yeah, yeah, totally. Yeah.
Awesome. Are you ready for our question round?
I guess so.
Here we go. The book you've recommended most over the past year.
Over the past year, before was the Almanac of Naval Ravikant, and
Okay.
now very recently I've switched that over to the Psychology of Money, which I am just finished, and I'm like, my mind is just still blown from it.
Oh, cool. I got to read that. He spoke. Did you hear him speak?
No, I
Psychology of
didn't hear him
Money.
speak.
Oh,
No,
he was maybe in Colorado, Steamboat last summer.
I must have
Steamboat.
missed it. Oh,
Yeah,
okay.
it was
Was it
good.
was it for the champions or the? Because I didn't stay for the elite thing.
What was your favorite movie when you were 15?
When I was 15, probably Men in Black
Men in
or Top
Black.
Gun.
Top Gun. Have you seen the new Top Gun?
I have not, but I have it like I want to go see it in the theater because everyone's told me you got to go see it in the theater, and I haven't had time to go.
Yeah, that's hilarious. Aside from real estate, one thing you could spend all day talking about.
All day talking about probably fishing and boats. I really love fishing. I live in Miami, so we go offshore fishing all the time. I love to fish. I'm also a pilot, so I'll probably talk your ear off about aviation all day.
Awesome. That's impressive. When are you happiest?
Me and my family, we do a month in Europe every year to get away from the Miami heat. And I have all morning before calls and texts and everything else start coming in. And I love those mornings with my family, just walking around some European city. And I really enjoy that. And I feel like that's like my highlight of my year. I always look forward to it.
Oh, awesome. And lastly, how can listeners reach out to you?
Yeah, I'm on Twitter at Cody Littlewood. You can also check out our website, curated REI, like curated real estate investments, but REI.com, or email me, Cody at curatedrei.com.
Awesome. Well, thank you so much. So many great insights, and fun to share some predictions or speculation on the market.
We'll see. We'll see. I mean,
We'll see. We may both be way off.
we may be both way off. I mean, there's somebody that was calling somebody earlier today. I was on a really interesting call. An analyst was saying that basically what they're seeing and what they think they're going to see is just compression of returns, and that no one's going to move off their prices even as interest rates rise, because no one really, because there's so much money sitting on the sidelines, and eventually they'll have to get back in the game.
Yeah.
I don't know if that's true. We'll see. No one really knows.
Interesting.
But that's why we buy for, generations.
Right. That makes sense. Good strategy. Well, awesome. Well, thank you so much, Cody. I really appreciate it.
Cool, man. Thank you so much for having me. It was good to talk to you. Loved hearing a little bit about your story too.
Likewise. Yep.
Cool.
I look
Take
forward
care.
to seeing you soon.
All right.
Keep in touch. All right. Thanks. Bye.
Thanks, bye.
Thank you for joining us for the Wild West Real Estate Show. If you like what we're attempting to do here, please subscribe so we can continue sharing these with you. And if you want to check out our website, it's quantumcapitalinc.com. You'll find podcast episodes as well as multifamily properties we're looking at and how you could potentially participate. Look forward to seeing you guys soon on the Wild West Real Estate Show.